Hi, everyone. This is Kelly.Broaddus with Broaddus Properties Group. And today we're going to bring you some super important and informative information courtesy of Tiffany Taradash with CrossCountry Mortgage. Is that right, Tiffany?
Absolutely.
So I'm going to ask Tiffany a few questions and she's going to bring us the answers. So, what is your prediction for the interest rates for the rest of this year and next year?
So it's very interesting when you look at how inflation affects interest rates and how recession affects interest rates. So basically, what the analysts are saying today in the market is we are definitely in a rough time right now. Everybody knows that. And the rates are increasing as inflation increases. However, we are almost to the top and the peak of inflation. Once the peak hits, which they're saying is going to be in the next couple months, then we go into recession and the rates drop back down. So the prediction is that by the end of this year, beginning of next year, first quarter of 2023, rates should come back down into the fours.
And this is historical. This is not something you're pulling out of your hat. This is something that you can show from the 60s that this is what happened historically, right?
Correct. So the slides you're going to see on this video, the one of the slides shows since 1965 to today, there has been 9 times of inflation where you will see on the slide that the interest rates do increase during inflation, and then at the right after the peak when recession hits, every single time you will see that the interest rates reduce by at least 1%, if not more, when we hit recession. So, this is historical data. That is the way, of course, they predict the future.
So, given that, would you say that the strategy for let's say for buyers, strategy for buyers is at right now they can get a smoking deal on houses. It's time to make offers and maybe go with a adjustable rate mortgage until the rates come back down when the housing prices will go back up and refinance. Would you suggest that?
Right. So, the second slide you will see is from the same amount of time from 1965 to today, the housing market, the prices of homes continue to rise through recession. So if you look on the slides, there are highlighted columns that show you when we're in a recession. And during those times, you will see on the slide that the housing prices do increase. So to hold back and stay out of the market right now is the wrong thing to do. The prediction is maybe we're not going to see the increases we saw the last couple years, which is kind of crazy, but it will increase at a normal rate of 4.37% through recession. So you will lose out on that increase of equity if you are waiting in the sidelines.
So, but does that mean that right now, when things are softening, buyers can possibly get things cheaper than they could have whenever interest rates were in the twos and threes, right?
Absolutely, because what you're going to see on the slides as well is if when the right now is the time to buy because there has been a little softening in the market. We all know that the sellers are dropping their prices a little bit. And now is the time to get in because as soon as the end of the year happens and we hit recession, the rates are going to come down, which means more buyers are going to jump in and buy, which means that the prices are going to go back up. So we have a little blip in the market right now to jump in, buy real estate, kind of, bite the bullet a little bit on the interest rate, knowing that they're going to come down at the beginning of next year and we can refinance you. And a lot of times I can refinance for no cost or very, very little cost. So it is not the time to wait.
It's a no-brainer.
Exactly. It's not the time to wait. It's the time to get in.
So, is there any final advice that you would give? Any silver bullets? Anything that you would say?
Yes. So the next slide, the third slide that you're going to see, and I'm pulling it up here. Shoot, it went away from my screen. Okay, the third slide you're going to see is the news always puts out the doom and gloom, right? It's always bad news for real estate, and we're in a, there's going to be a bubble. Well, if you look at this slide, the in October of 2015, they were saying that there was a housing bubble and to not buy real estate. That year alone, the market went up 5.1%. In August of 2016, it said there was a bubble. That year it went up 5.4%. 2017, it said home ownership does not build wealth. That year it went up 6.1%. September of 2018, it said it's better to rent than to buy. The market went up, the housing went up 4.1%. In July of 2019, it said that there was a shift in housing and not to buy, went up 4%. In December of 2019, it said that the housing market was hit hard. That year alone, it went up 16%. And then in 2000, yeah, in 2021, it said the housing boom is over and the housing fell because of pandemic. It went up 18%. So since 2015 to today, if you bought a $300,000 home, it's now worth $523,000. If you listen to the news, you would have lost over $200,000 in equity gain.
Sheesh.
So really, really interesting.
One more question, and then I want you to tell everyone who you are, and where to get a hold of you. How is this different than 2008? That's the question everyone is asking.
Well, in 2008, it was the mortgage meltdown, right? Completely different than all of the other times. And if you look back at the slides, you will see every time from 1965 to today, except for that 2008 blip in the market. It was an anomaly, right? What was happening was people were buying homes with these crazy loan programs where they were putting zero down. They didn't qualify because it was stated income or no income, no asset verification. So people were buying homes that they had no skin in the game. They had no cash into it. So when there was a little blip in the market and it did start to, the prices did start to lower, people walked away because they didn't have any money into it. So now the loan program, sure, we can do minimum down, but you can't really do zero down. You have to have some money into it. And with all the cash buyers that we've seen over the last 2 years, people that pay cash for homes are not walking away from homes. People that put 10, 20% down, they are not walking away, even if there is a little blip in the market. So completely different situation.
And when you say back in those days, people were doing, those 100% combined 80/20s, they were doing the arms, all of those they had prepayment penalties, horrible ones. And now they made it so you can't do prepayment. Isn't that correct?
Correct. So one of the more popular arms right now within the last couple weeks with the increase in rates, we're going to see more of them. But right now, the 7-year arm is really popular. It saves you about a 0.5% in the interest rate, and it's fixed for 7 years. On the 8th year, it starts adjusting. So for those first 7 years, it will not move. You can refinance it anytime. You could pay it off. You could sell the house. You could do anything with that. The other thing that's coming out, like literally any day, is the 40-year amortization. So instead of a 30-year amortization, for now, just to keep your payment more affordable, you can do a 40-year, which on a $600,000 home, a 40-year saves you $300 a month. So that could be a loan program. Maybe it's not a forever situation because you might not want to finance for that long, but it can get you into a comfortable payment for now until the rates come down next year.
So people can get an arm and not be hit with a prepayment.
So there are a lot of.
Great. So Tiffany, can you tell everybody where to find you and so forth? I know you moved companies, so
Yes. So my name's Tiffany Taradash, also Tiffany Whalen, both. I'm with CrossCountry Mortgage. My phone number is 480-205-5390. And my email is tiffanyt@ccm.com. Please reach out to me with questions. I can work up some scenarios or some loan programs for you to see if anything fits your needs. I'm more than happy to help. Thank you, Kelly, for having me.
yeah, and I think you have some pretty great jumbo programs as well, right?
Oh, amazing. Yes, we have everything is in house. We close quick with 2 to 3 weeks on jumbo programs, and the jumbo interest rates are actually better than the conforming. That loan number is $647,200. If you're above that, your interest rate's actually better than below, which is kind of funny, but that is right.
Great. Well, thank you. This is Kelly.Broaddus with with Broaddus Properties Group. My phone number is 928-606-6749. My website is northernarizonafinehomes.com. And Tiffany and I can help you. If you want to buy whatever price range it is, we would be happy to help you. So we make a great team, don't we, Tiff?
We absolutely do. Thank you, Kelly.
All right. Bye, everybody.
Okay, bye.